Did you know you can lower capital gains tax on the sale of your home? There are a few ways to avoid those costly taxes as long as you understand your options. Let's dive in to see how you can save your hard-earned money when it comes to real estate. Hey everyone, welcome back to my channel. If you are new here, my name is Spencer Su, the tech realtor of the Bay Area, and I'm passionate about making you a smart investor in all things real estate. Given the nature of this topic, here's a disclaimer. Be sure to always contact your CPA or financial professional to confirm what is right for you. However, these are the general guidelines for people to understand, but you can also view all of the information on the IRS website. When in doubt, talk to your trusted advisor. So you might be thinking about the fact that your home has gained a ton of equity over the years and you're really tempted to sell to capitalize on that. It sounds straightforward, right? I've got a home, I've got equity, I'll sell and make a profit and maybe upgrade my place. However, what if I told you that up to 20% of that profit may go to taxes? But then what if I told you that it didn't have to all go there? That there are taxes you can use to lower some of these losses and also an understanding of what is available. In most cases, it will break down like this. If you own your primary home for 2 out of the 5 most recent years, you can keep up to the first $250,000 tax-free if you're single and up to $500,000 if you're married. Easy money, no strings attached. And for most people, that will cover their initial investment and returns. After that, there are capital gains taxes applied to what you earn. What happens to the surplus or the difference? If you own the home for less than a year, it would be taxed at ordinary income. That's why for flippers, it's a much higher tax amount that they have to pay. If you own the home for longer than a year, long-term capital gain rates are based on your income. You'll pay 15% in capital gains if you're a single file earner between $39,376 and $434,550, married filed jointly earning between $78,751 and $488,000 and $850,000. And lastly, you'll pay 20% in capital gains if you're a single filer earner earning more than $434,550,000, or if you're married filed jointly earning more than $488,000 and $850. The homeowner capital gains exemption is only allowable once every 2 years, but worth the time to apply. You can add your cost basis and any improvements made to the home up to the $250,000 of single or $500,000 of married in these homeowners exemptions. There are different sets of tax implications depending on how the property is used though. If this is a secondary home or a rental, be aware different tax rules will apply. You certainly want to consult a tax professional in these different scenarios. Another useful tip is the 1031 exchange program, or better known as a like-kind exchange. It's a swap of properties that are held for business or investment purposes. Although the term like-kind is used, there are liberties in terms of what kinds of investments you can exchange, such as farmland for a condo or a single-family home for land. Consult with your financial advisor about all opportunities in regards to the specifics, but the exchange must meet standards in the eyes of the IRS to defer capital gains tax. There is no limit on how many times or how frequently you can do a 1031 exchange. The 1031 exchange process is not a very expensive program, so I've seen a lot of interesting investment opportunities that have come about this, but also deferring their taxes for the future. Now you may ask, is it possible to do 2 of the 5 years as a primary residence and 2 of the 5 years as a rental? Technically it is. So what happens in this case? This is where things get a little gray, so you certainly want to conduct and talk to your tax professional. It's best to consult a financial advisor in these cases to avoid penalties and making sure you are in the clear, given it depends on which side they want to be and how conservative they may be. In any case though, it's worth always exploring ways to save money, especially when it comes to taxes. Now I talk about why to sell in this market in my latest video right here.